Colin McLean now, CEO and founder of SVM Asset Management. We have had a pretty good rally as far as equities are concerned over the past 4-6 weeks. What about these downgrades that we heard from Moody's overnight? Does it really make much of a difference, or will that actually have some impact on the markets today?
I don't think it'll stop markets from progressing further. I think quite a lot of people missed out of this rally, and they're going to buy into any sell-off. Right at the moment, I think equities are just a little bit overextended, but there's a lot of money I think still got to come in.
So you think we're going to have a pause? How long will that be for?
I think it's got to correct perhaps the metals and mining and some of these things a bit, but for some of those stocks that might be a few percent. But I think it could get over quite quickly, really, because, as I say, there's money on the sidelines.
How much more upside do you see on markets this year, globally?
Well, I think there's quite a bit of upside in some of the financials. I think that the banks are well sold off, and we've seen good rallies in them, but it's quite clear governments are behind them. The LTRO and other things are making quite a lot of difference to the banks. So they're not the problem at the moment, and they're really still quite cheap, so I think they could run some way.
Let's take a look at some of the stocks that you like and perhaps that you're avoiding. I mean, we talked a lot about luxury over the past few weeks, few months here, and you're saying Burberry, Mulberry, it's performed particularly well. Is there still value in that when you look at those increases over the year to date?
Yes, I think often investors don't understand the characteristics of good growth businesses. I think in a background of fairly weak global growth, I think growth could get an even bigger premium. That's consistent growth. And it doesn't take a lot of capital. You know, these companies have got good margins, good growth outlook, but they also don't take a lot of money to finance that growth, unlike some other businesses.
And they're very focused on Asia. How do you feel about emerging markets versus developing markets? Are we going to see emerging markets perhaps outperform this year?
I think that trend could continue. They got sold off quite a lot last year, and I think they're back on trend again just now. So I think emerging markets could recover further.
Interestingly, you're getting slightly more interested in financials in Europe. Yeah. Is it because of the incredibly low valuations generally?
I think it is, and I think we're seeing the emergence in the banks of some polarisation between the national champions, the major banks in each country, which are being supported. Quite clear government support will stick behind them. BNP, Santander,
Barclays,
and some of those, yes, those sort of banks. And I think those are still quite cheap. They are going to improve their returns. They're being supported by governments.
Let's just share the stocks that you like here. You like Barclays, you like BNP, you like Deutsche Bank. You don't like Lloyds or RBS. Is that right? Because you think they're going to see more write-downs? Yes,
there's still more impairment. One of the other aspects of the LTRO is it does now give the banks the wherewithal to start making some of these write-downs and impairments. They didn't really have the equity before. Now I think we're going to see some of that.
Sorry to interrupt you, I was just going to say, when you see some of those figures, you know, the percentage increase, it looks terribly flattering, doesn't it? But let's not forget how low they have fallen. And the same can be said very much about retail. We've had the likes of Dixons and Home Retail Group. They're up about 45%, some of them. You're still worried, though, about the retail sector, certainly here in Britain and Europe.
Yes, I think the deleveraging that banks are now forcing on consumers is making it very difficult for a lot of retail and other consumer businesses.
I mean, is this overblown when you see 50% up on Dixons Group? OK, it's still only at 1477, but nevertheless.
My own view is that it is. But we saw this sort of short squeeze a year ago. In fact, it very often happens December through January. We see the rally, everyone just gets a little bit more encouraged. But last year, Dixons did much the same thing. We've seen it across the retail sector. There's not been a lot of volume behind it and not been much change really in strategy. I think the outlook's still bad for these companies.
So if that is down to the consumer and banks deleveraging and therefore not lending to the wider economy here in Europe, you have a different view of the US. You're bullish on that economy, and therefore you prefer investing in companies that have a big exposure to the US. You name CRH, the cement maker. Also, you've got here Ashtead, the plant and machinery hire group.
Yes, both of those have got very good exposure to the US, and they're quite highly leveraged to that. And I think we're seeing, particularly from President Obama's speech, the determination to improve spend on transport and some of the other infrastructure areas. These companies, CRH, Ashtead and Plant Hire, will certainly benefit from what's going on there. And they've picked up quite a bit, particularly Ashtead. but there's a lot of value in them, a lot of potential for recovery.
And where's your biggest overweight? Does oil and energy just keep on giving? Is it going to keep on giving for 2012?
Yes, I think oil's the single big bet. I think we'll see the Brent oil price push up above 120 and people will start thinking about 150. One of the consequences of the political turmoil we've seen is a lot of the Middle East and North African states are now focusing more on spending their money on social expenditure, redistribution, and a little bit less on developing the fields that need to grow. So I think that flat supply growth is a formula for a higher oil price.
Supply is going to keep supply constraints going to keep it going higher despite the weak global economy?
Well, we're still seeing enough growth in the global economy. Last year was a big year of growth in oil demand. Supply's been flat for about 7 years, and I don't see that changing, so that's good.
Colin McLean, CEO and founder of SVM Asset Management. We're grateful to you. Thanks very much indeed.